Just a couple of days ago, we were talking about your scenarios. One of them was a contested election where it looks like we might be right now, and you still forecasted a rise for the S&P of 5 to 7%. Do you still see that in the cards?
I do. I mean, I think it's going to take place in the midst of everyone being very nervous and very wary because, we want, everybody wants in this democracy a clean election outcome. But a contested election isn't something that the market necessarily worries about if it's clear that this is there is a winner, but it's just a matter of time. So I think it's still too early to really have a sense. But before things get too bad, I think people have to remember there's a lot of cash on the sidelines. That's why we saw in the last couple of days the market rallying. And again, if things get really rocky, we have two other things to keep in mind. One is that fiscal stimulus still could have a path forward if we've got Congress figured out. And of course, the Fed can intervene if the markets get extremely nervous.
The president called the election a fraud tonight. He called it a fraud. He said he's going to the Supreme Court. You act like he barely did anything, that it's just the same as it was before. Yesterday morning, quote, Monday's rally has legs no matter what happens with the election. There's less uncertainty now. It sounds like you're sticking to that, even though the goalposts have moved.
Yeah, Scott. I mean, those are unfortunate words to be used because this has clearly been a legitimate election. I voted yesterday. I know that people were very careful. They were checking. I mean, there's no reason to consider anything about this election a fraud. So, but Scott, yes, I think that the markets don't necessarily need finality if they can sense, where the Electoral College is going. So I think that I'm speaking a little prematurely, but I think in the next, 48, 36, even next 12 hours, if we get a better sense for how the Electoral College is going to sort of play out, then whatever happens in terms of legal challenges is essentially a formality. But Scott, you're right. It's unfortunate.
Dr. J, I want to go to you. I know you saw this action yesterday. I'm having trouble keeping track of my days. There are a lot of bearish bets on the SPY with the November 4th expiry, heavy put buying there. The anticipated move by midweek would be down 3%, midweek being Wednesday today. I wonder, do you still see that do you see that in the cards? Do you see that as being how the market plays out today?
Melissa, I guess I don't quite view it the same way. When people buy protection or when they bet on upside of any index or equity, they're basically either putting insurance down. That's the bet you're talking about, the downside. And I think that's a protective bet because of the gains that they're trying to make sure don't vanish overnight. If we saw a whoosh to the downside, I mean, we were down 5.6% last week. I'm not surprised somebody wanted to snug up a little protection under the market here. And that's pretty high premium they're paying, like you say, to pay for 3% downside risk before they start getting paid. That's a lot. And I think right now we're seeing the VIX today, based on the futures we're tracking, down about 5% right now, Melissa. And one of the keys to watch will be the VIXN, the VXN, for the NASDAQ, and I'm sure we'll get time to talk about that later, but that one is up 42% since the August lows of that particular index, which was near market highs, and then spiked up to into the 40s from like 26. Now it's at 38, so it's still very elevated, even more than the regular VIX. The NASDAQ is elevated, and yet those futures are also trading higher.